Who are you? Where are you from? And then I will ask you a whole bunch of questions.
Right. So I am based out of Hong Kong, originally living in New York, so spent a lot of time on Wall Street. And right now I am building a fintech company focusing on launching stablecoin products. And the next generation of stablecoin product that are geared towards traditional economic means rather than just purely as an on-ramp to trade crypto. So we'll talk a little bit more about that.
There's a lot to unpack there. Now, say your name again for the audience.
Sean Lee.
Sean
Good
Lee.
to meet you all.
Fantastic. Glad to have you. Okay, so look, we had a chance to talk a little bit before, and you've been in this field and a lot more for years now. Every superhero, I like to say, has an origin story, and I don't want any false modesty. You are a superhero. Give us a little bit of your origin story. What was your path to discovering crypto and blockchain, and then down the rabbit hole towards stablecoins? And then we'll go from there.
Yeah, certainly. You know, it's funny when you talk about superhero. When we were designing the logo, and my marketing was asking me how do we want it to look on the T-shirt. I'm like, well, make it like Iron Man, right? Right in the middle, red,
very cool.
Right? So all that. But my path into crypto is actually quite. I don't have a fancy story about me buying Bitcoin at $3 or whatever.
That's not the question. The question is, did you buy pizza for 10,000 Bitcoin?
No, unfortunately, no. Unfortunately, no. Otherwise, I have a good story to share. But my story is actually, I come from the infrastructure side. So for the longest time, most of my career has been building financial infrastructure for Wall Street banks. Everything from data centers to cloud computing to AI and modeling and eventually blockchain. So when I got into blockchain, it was predominantly on focusing, creating blockchain-based applications, no token, blockchain-based applications for banks that are settling with each other, right? So a lot of that really piqued my interest in terms of this decentralized, distributed way of doing things. Now, a lot of banks, back 4, 5, 6, 7 years ago was predominantly focusing on private blockchains. So I thought that was already interesting enough. And then until I got a phone call, and I eventually got into a blockchain company. The company was called Algorand, which was a layer 1 blockchain.
And if I might, you've obviously done a lot, but maybe that's where you're famous, I think, because you're so publicly associated with that and had such big success. Is that fair to say?
So I got into Algorand right after mainnet launch. So I was asked to basically get the foundation up and running and eventually build the ecosystems and get it into the markets and find users and find applications. Very proud that the 2 years plus that I spent there, at one point it was a top 10 asset, right, during the last bull run. So now, obviously, market share, market valuation isn't everything, but the goal is to really make sure that layer 1 infrastructure has a place in traditional finance and also in the crypto space so that we can become that bridge that brings traditional capital into this new digital asset space and vice versa. So that's where I got started. But then I also had a lot of interest in policy because I think eventually and inevitably, this new asset class will have to be regulated somehow. And either it gets regulated in a way that financial supervision teams look at it just like a security, or there may be a better way to actually look at it, right?
Are you talking about crypto in general or stablecoin specifically?
I am talking about crypto in general, right? Stablecoin to me is just a crypto asset that happens to be collateralized one-to-one. That's how I look at it, right? So I then spent the last two and a half years and continue so today with a industry group called the Crypto Council for Innovation, which started in Washington, D.C. Started by a few small players like A16Z and Coinbase and Paradigm and whatnot that are very heavily in the digital asset space, but very geared towards making sure that the regulatory development aspect is also it's also in line with how the industry is also developing as well. So through that, I had a lot of opportunity to speak to regulators pretty much in every jurisdiction, right? In the US, in Europe, in the Middle East, and obviously in Asia as well. And the goal is to make sure that we as an industry really understand what they are thinking, but then also to help educate them because this technology and this new asset class is fundamentally different than how they've been looking at it from a banking supervision perspective. So that has been very, very fruitful for me personally. And I think that leads me into now building a stablecoin business out of Hong Kong. Because if you think about a regulated stablecoin, that is the perfect intersection between bringing on-chain assets, tying that into traditional finance, but at the same time doing it in a compliant and regulated manner.
Sure. Now, when you say a stablecoin business, dive into that for us.
So when I say a stablecoin business, there's really two parts of it. There is the actual stablecoin itself, and that could be obviously the US dollar pegged or any other currency pegged. And then there's the infrastructure around it. Because stablecoin by itself is just a coin, right? It's just money, right? So I have money in my wallet. No, I don't have physical cash anymore. No one carries that around. But that money can allow you to do a lot of different things. It's just a matter of the applications and the utility that you bring around it. So to us, it's a two-sided business. There's the actual launching of a coin that is under a regulated regime and fulfilling all of the reserve management requirements, the AML requirements, the KYC requirements.
Just for myself and for the audience.
Yeah.
Your stablecoin business is a particular stablecoin. It's a foundation for launching stablecoins. Can you be specific?
Okay, that's a great question. So let me take a step back. Yeah, let's take a step back. So if you think about the stablecoin market today, it's roughly about 170 billion plus, somewhere around there. Coincidentally, the interesting part about that is roughly 99.5% US dollar based, right? 99.5% US dollar based. Now, naturally, that makes sense because US dollar is the most dominant currency in the world. And when you have a new digital on-chain dollar, obviously, a lot of people will lean towards launching a US dollar stablecoin. And I'm not only talking about Tether and Circle and some of the larger players. Many of the other stablecoin variances are US dollar based. But if you look at it from a international payments perspective, international payments today, and I mean the traditional world, the traditional old boring world, it's roughly about 60% US dollar. 60%. Now, that's a big gap between 60% and 99.5%. That's roughly 40%.
Sorry, that's 60%. You're talking about international trade or
international
global?
Trade, real international trade. When countries are trading with each other, businesses are trading with each other, it's roughly 60%. We did a whole research paper on this that we published a couple weeks back. 60% in using US dollars. And it varies, right? It's usually around 58 to 60%. So if you look at it from that perspective, that's a 40% gap that will normalize at some point. And we do think, given the fact that crypto, digital assets, stable coins are now rapidly maturing around the entire world, that maturation, that normalization phase is going to start happening now, right? You got to think that's going to happen.
I want to give a shout out to the AV crew because they just corrected my company on the background. Guys, thank you. Love you.
On the spot, right?
No, they did. They fixed it. It was great.
Yeah. So to us, the proposition of a stablecoin business, it's no longer just launching yet another US dollar-based stablecoin because there's a dime a dozen now. So what can we do?
Oh, so let me pause you. 60% is US dollar, but that doesn't mean 40% is something else. You have panoply of currencies, right?
It is. It is. So you look at the euro, you look at the Japanese yen, you look at the British pound, right? The Hong Kong dollar, the RMB, right? These are the dominant currencies outside of the US dollar that fills the rest of the 40%, right? So that happens today. So that's one of the reasons why you're continuing to see different jurisdictions around the world. Right now, there's 6 jurisdictions. And by jurisdiction, I mean countries, right? Countries/jurisdictions. Hong Kong isn't a country, so I got to be careful there. But 6 different jurisdictions that actually have a stablecoin regime, right? UAE is one of them, right? UAE, MiCA, obviously in the Euro regime. Hong Kong, Singapore, Japan, UK is now finalizing their consultation. And we'd like to think the US is probably going to move into that direction next year as well. So there's a reason why all of these jurisdictions are enacting stablecoin regime. Why? Because they see it as a way that right now it's dominated entirely by the US dollar. Their currency have value. And if their currency will need to continue to have value in the digital age, they need to have their own currency-pegged stablecoins to facilitate economic trade. So you're already seeing that around the world. So that normalization of that 40% between the 99.5 and the 60% is going to come. And that's going to happen right now.
So I had a discussion recently, and it's something I hadn't thought about before. Actually, someone else brought this idea to me, that the world seems to be undergoing a gradual, natural, or not de-dollarization process. And of course, that can be expected as the U.S. Share of the global economy shrinks over time. And then, of course, some people view the weaponization of the dollar as like a reason to get off the dollar and seizure of assets and all that stuff. But I also heard the argument made that USDT and maybe USDC to a certain extent are ways of backdoor slowing down de-dollarization because the U.S. government may not like the fact that there's a crypto equivalent of the dollar because it doesn't have the same level of control. But then again, it was keeping the U.S. dollar in use in some ways.
Not only in use. If you think about look at it from a macroeconomy perspective, right? The U.S. government continues to print like crazy and has been going on for a long time now. So the U.S. Treasuries market continues to grow. And with Tether now being one of the top 10 buyers of U.S. Treasuries, that's another way of ensuring that the tremendous amount of deficit that the U.S. government continues to run will continue to have buyers in the market. It just so happens that the buyer and the medium of how those U.S. Treasuries are being used are now on the blockchain and in a permissioned and blockchain manner. It's entirely changing the look of that. So if you think about how that works, you have stablecoin companies, the top two big ones, obviously, that are the biggest buyers and increasingly more so into buying US Treasuries. And in fact, if you think about it this way, I'll give you another stat, right? China used to be the number one buyer of US Treasuries, right, for a long time. China has obviously been decreasing the portfolio, but it's still owning a lot. So it decreased that roughly by about $50 billion over the last 12 months or so.
50 billion per
annum.
Okay.
Yeah, but that was just the last 12 months, right? So whether that's going to continue or not, no one knows. But
I'm not sure that's a lot.
That's not a lot. But the interesting thing is who's actually filling the gap of that 50 billion?
Oh, Tether.
There you go. So now you have a sovereign state, the second largest economy in the world, kind of rebalancing their portfolio, if you think about it that way, right? Rebalancing it, maybe selling off some of the treasuries and then going into other assets. And then now you have a stablecoin company that's actually filling the gap.
It's kind of crazy.
That's kind of crazy, right? It's not the UK like filling that or Japan filling that. It's actually a stablecoin company. Just think about that for a second, right? So even though the number in the grand scheme of things is not very large, right, for a country as big as China, but China selling and Tether buying, that's really odd, right? I really love looking at these economic data because that's fundamental if you're thinking about crypto and digital assets as it relates to the real economy. That's the kind of numbers that you look at. It's not TVL and things like that. I mean, I love TVL and all that, but a lot of the TVL is really made up. So you look at real economic data, and those are some of the numbers I pay attention to.
Okay, but again, and sorry if you said it, but say it to me like I'm stupid, like I'm 5 years old. One sentence, what is your business? What is your business?
So the business is twofold, yeah, like I mentioned before. Launching a number of stablecoin. We'll start with a number, and we'll start with the Hong Kong dollar, obviously, because we're in Hong Kong. But coincidentally, the Hong Kong dollar is pegged to the US dollar. So it's essentially US dollar. So there's some advantages to that.
It's launching a suite of stablecoins.
Launching a suite of stablecoins and then building a product that brings those suite of non-US dollar stablecoins to facilitate economic trade.
Got it. Okay. So is there, so one thing we talked about in the good explanation, thank you. So one thing we talked about in the pre-talk, if you like, was that you're now, there's one regulatory regime with the US dollar, and now you're dealing with the other 40%, which is a zoo, and doesn't necessarily have a line regulation or even have regulation. How are you weaving, and your goal is to increase trade. So how are you weaving that path?
So that's a great question. Like I mentioned, there's 6 jurisdictions in the world that have a stablecoin regime. So those are obvious targets, right? Places that have stablecoin regime will obviously have either regulated entities or issuers that are going to get a license that will have their own currency-backed stables that we can trade with. Right? So that's the first step.
So that's how you do it within each jurisdiction.
Correct.
Step one.
Correct. So for example, UAE here has a regime. There's going to be dirham-backed stables. We will trade the Hong Kong dollar stable with the dirham-backed stable to facilitate trade. Not to buy crypto, but to facilitate real economic trade. Bilateral trade between the UAE and Hong Kong, not China, not including China, just Hong Kong and UAE, is fluctuate anywhere from 15 to 20 billion a year, US dollars, right? You take 1% of that and you move it on chain. That's the number we're looking at, right? So that's just to facilitate trade. Now you extrapolate that to countries like Brazil, for example. Brazil and China trades 200 billion a year. It's 80 billion of soybeans going one way, and then it's like EVs and electronics going the other way. So 80 and 20, yeah? So it's not exactly even. Again, under that scenario, Brazil is not one of those 6 jurisdictions that I talk about. But Brazil have lots of regulated banks. So if it's a regulated bank that's launching a digital currency, let's say in the form of a stablecoin, that still works for me because I'm still dealing with regulated entity on the other side. So counterparty risk and the notion of AML, KYC, and all of those things, prudential requirements that every government cares about, travel rules, right? Those will still be fulfilled because I'm dealing with a regulated entity and they're used to doing that anyways.
Interesting. Okay. Wow, there's a lot to unpack here. Also, tease it out for me. You know, central bank digital currencies were a big, maybe they're still a big topic, but I heard a lot more about them 2 years ago, 1 year ago. And in my mind, the idea of a stable coin maybe replaces the need or functionality of a CBDC. Do these work together? Are they in tension? Are stablecoins going to disappear the moment we have CBDCs? Like, how does this work?
I get this question a lot. In fact, just about 3 weeks ago, I did a debate, CBDC versus stablecoin. I was obviously on the stablecoin front. We had another person like you on defending the CBDC. Was that really?
Oh, I'm not defending.
I'm just saying. That's let you picture what it was like. Yeah.
Come on.
So we had a really friendly debate, and of course, just like every debate, usually there's no one winner or the other. But I look at it this way, right? CBDC is central bank digital currency. Obviously, the governing and controlling body is the central bank. A stablecoin is not controlled by the central bank. In fact, it's controlled by either the issuer, who must be regulated, I think, or regulated entities that's issuing the stablecoin, right? So it's a matter of who's actually controlling the smart contracts that dictates how that currency, that coin works, and also where can you actually use that coin. So think about it this way. There have been many CBDC projects around the world. Many. In fact, I believe 70 or 75% of all countries in the world are investigating, researching, or doing some sort of pilot, right? CBDC. I haven't seen one, except for the one in China, that is actually out in market. I think there's a couple of countries in Africa that's also trialing as well. CBDCs fundamentally is really hard. The reason for that is if you're only looking at a single country, and if you have a stable coin that only operates in the same country versus a CBDC that only operates in that country, it looks very similar. It looks very, very similar. As soon as you need to do cross-border, CBDC becomes very hard. The reason for that is how do you get one central bank, country A and country B, to completely agree? You can probably make that happen. What if you add another country? Now it's A, B, and C. The complexity isn't just one-to-one anymore. There is now many more complexity. What if you add one more? What if you add one more? Standardization, agreement in monetary policies, and also the transaction flow, and also how the token standard needs to work. It becomes very hard. And also, don't forget, most CBDCs operate either in a private blockchain or many of them don't even operate in blockchains. So then how do you actually have on-chain transactions that are done seamlessly as you do on public blockchains?
No, but I've made the argument, I've heard other people make the argument that like a CBDC without a blockchain isn't a crypto, it's just an updated version of electronic money where the government has the ledger, which isn't inherently distributed. But the fact that it's not crypto doesn't necessarily make it bad or not useful. And so I'm not going to advocate. My own personal view is that CBDCs are a threat to freedom for obvious reasons. I mean, they can turn off your ability to pay for heating, and or if you're it's nothing to do with China. You saw it in Canada where they seized bank accounts of truck drivers. I don't necessarily know if I want the government doing that. But but that doesn't mean they're not functional. And let me kind of poke back at your idea. What if you had the BRICS coming up with a common currency? Well, it'll be a central bank's digital currency, and I can see the BRICS establishing a standard. Like if you want to be part of our CBDC playground, here's a standard that we all agreed on. It's like the SWIFT standard where a bunch of people agreed on it. I'm not sure that the coordination, I understand what you're saying about the coordination problem, and that's bilateral. And I understand that also there's a compounding explosion of complexity when you add more parties, but that's why you have standardization in international bodies. We do it all the time. So is that really such a block?
I see stablecoin almost as an experiment to allow CBDCs to actually work. Because the coordination will take so long and the coordination is so complex that by the time different governments and majority governments around the world are able to agree to a certain set of standards, stablecoins already demonstrating how it needs to work. Now you actually just need to bring it back in. And also, I look at it this way as well, right?
Is there a natural sunset to stablecoins?
No, I don't believe so. It's a choice, right? I can use this card, I can use payment method, I can use direct wallet-to-wallet transactions. It's a choice for users. The users can pick what they want to do. But think about it this way. A stablecoin essentially is a wrapper. It's just a wrap. I am today wrapping around fiat money. Tomorrow I can wrap it against a CBDC. I can wrap it against a basket of CBDC. That's most likely what the BRICS currency is going to look like, if there is a BRICS currency.
That's a clever idea, and that's actually the first time I've heard that. So that's funny. So if you have CBDCs, I mean, you're pointing out a legitimate issue, which is, there's some feeling maybe that CBDCs will be limited by national borders. I don't know if the U.S. is going to want the Chinese CBDC running in San Francisco, though who knows what will happen by that time. But yes, you kind of get around that border issue, right? Semi-privatizing it through wrapping it in a stablecoin.
So there's a project called Project M-Bridge. Some of you may have heard it. It's started by the Bank for International Settlement. It's been around five years or so. It started with 4 countries, right? Four jurisdictions. Hong Kong, China,
gotta be careful there.
UAE, and Thailand, yeah? And then it just recently added Saudi Arabia as well, right? So it's very Asia-centric, Asia, Middle East-centric kind of coordination. There's also Project Agora, which is a G7-centric CBDC pilot. There's yet another one in somewhere else. So what you're already seeing is geopolitical tensions playing out, even in CBDC implementation, even pilots, experiments. So just technology-wise, I have no doubt you're able to make CBDCs work. I have no doubt. Technologies, we can figure it out, right? Innovators will always come in with new ideas and test them out. It's geopolitical tension that will be the biggest blocker in having a holistic CBDC system around the world that will actually facilitate that in a seamless manner. It will take a long time. Stablecoin, being that it's a wrapper, you can make that happen first. You can make it happen on public permissionless network. You can still put all the compliance wrappers around it. AML, KYC, all of the necessary things to keep users, businesses, and institutions comfortable. But it's not one or the other. All of these things will need to happen. How do you demonstrate trade flow can work without worrying about geopolitical tension? You can make it work through something like a stablecoin.
That's a great argument. I haven't heard it articulated like that before. So stablecoins can sort of act as middleware between geopolitical bloc CBDCs.
I totally look at it as middleware. That's a William Gibson
future. Wow. Yeah. That is, the world is going to be very interesting in 2035 or maybe before. And I think we just got a vision of it right here. So you're obviously a visionary. You obviously have strong feelings and inclinations in this area. You have a intellectual, policy-oriented brain. What are you looking for in terms of partners and people, and who should approach you, and how do they approach you if they want to get involved? Suppose you now have 200 raving fans. How do the fans make connections?
Connection is very simple. I mean, like we're all on socials, right? I do a lot of postings on LinkedIn. That's my primary channel of communications. Primarily because I think a lot of the content and also the conversations I'm having is leaning more towards the traditional finance and DeFi bridge, right? So a lot of the conversations are happening there. I do run a small podcast, right, on LinkedIn as well. I share a lot of what's happening in Asia from a policy perspective, in Japan, in South Korea, in Australia, just so that these information are getting out there, right? So I do. So you can just look me up, Sean Lee, on LinkedIn, and then of course my Twitter handle and also my Telegram handle is the same, Crypto Sean Lee, very simple. So if you want to reach me there, I'm happy to have a conversation. In terms of what I'm looking for, it's willing partner, right? Willing partner that are looking at driving legitimate businesses that wants to facilitate traditional flow, right? I'm happy to talk about crypto flow. I'm happy to talk about DeFi projects, meme coins, NFTs, all of that. At the end of the day, what I'm trying to build my business to do is to make sure that this new technology, this maturization of this new asset class has a place in the real world, not only in the crypto world.
Amazing. I love your deep thoughts. So let's give a big round of applause, please, to Sean Lee. Very interesting.
Thank you so much.
Don't leave just yet, because obviously I was amazed, and I was really, for me, it was really interesting to listen to. Let's say we had a deep dive into the world of stablecoins and how, in this case, they facilitate international trade. So actually, Sean, there are people who want to ask you some questions as well. Not only Gordon. So please, we have one question from the lady and a nice dress.
In your opinion, how the new stable coins will influence the monetary policy of the key financial regions, key financial countries?
That's a difficult question to answer, and I'll tell you why. Right? If you look at countries that have rapidly depreciating local currency, a stable coin operates in a very different way than if you were in a developing country that's got a very strong currency, right? So stable coin don't operate the exact same way in terms of monetary policy, because quite frankly, if you think about it, there's 190 or so countries in the world. I would argue many of them really don't need a local currency. Right? Why would let me not name any countries, right? But why would a lot of these very small countries still require to run their own currency in the grand scheme of things and where things are? So you're going to start seeing stablecoin or regulated stablecoin. I need to really focus on that part, right? Because it's not just any unregulated stablecoin that provide no transparency, yield bearing, and all of those crazy things. But if you're looking at regulated stablecoins in the form of facilitating, both everything from everyday use to payroll to government subsidies and monetary policies, then you can actually see how stablecoins becomes, much more ingrained in a lot of the developing countries versus the developed markets. So I look at it the way you're going to see where monetary flow goes, and you're going to continue to see that local currencies either going to have a stronger play in their own stablecoin implementation, or you're going to see stablecoins, especially the US dollar ones, that are going to massively impact smaller countries in terms of how their monetary policies are actually designed.
Yeah. Thank you.